Welcome to Technical Tuesday. My name is Fred Razak, Senior Trading Strategist here at CMTrading, and we're continuing on our money management series by discussing winning versus losing streaks. Now, at some point, if you're a trader, you've gone through this. But before we start, make sure to like and subscribe and share, especially if you find value in this particular video. So, we've all gone through this. Winning streaks, losing streaks, and yes, this is part of psychological trading where depending on your headspace, depending where you are mentally, you're doing one of the two others. I'm not discussing that. I'm talking only about the trading and only on how you could capitalize in these type of environments to make sure that you're trading successfully. So what happens when you're on a winning streak? Yeah, you're making money and you think you should be increasing size. You should be getting much more aggressive in the market. You're much more arrogant as a result of it, not you, but traders in general, okay, get much more arrogant and they increase in size and they get much bigger and they have much more to lose. So what I would argue, okay, is on the opposite side. When you're losing money and you're in a losing streak, you would be decreasing size, right? You would be taking money off the table and getting a little bit more defensive. Now, I'm going to share with you a new way, okay? Now, hear me out, and it's the exact opposite. But hear to the why before you jump on me, okay? So hear it out. When you're making money, you're like a stock chart. You're like a chart that's going up and up and up and up and up and up and up. At a certain point, this will retrace, okay? Now, I wouldn't be shorting this as it's going up. I wouldn't be betting that it's going to go down, but incrementally, your chances of going higher and higher are much less as you go higher and higher. That's just the nature of things, right? And as a result, as a trader, you want to flip that. You don't want to get to a point where you're arrogant and overconfident. You want to protect some of the winnings. You've had maybe 6 or 7 days that you've had winning trades, right? And you want to continue doing that. But you don't want to break that cycle and get more aggressive and have one bad loss and then go nosedive. You want to incrementally get a little bit more defensive as you're going higher. As your P&L is getting bigger and bigger, on the positive side, of course, incrementally on a daily basis. Now, on the flip side, if you're trading in the financial markets and you're in a losing streak, now, yes, like I said before, it's related to psychological factors. It's being in the wrong headspace. But now, what you're doing is what you should be doing, as opposed to getting more and more aggressive in that type of situation and, getting into a situation that you're getting a little bit more constrained, I would argue do the opposite, okay? And you're doing the opposite in the anticipation that you're going to be turning around. Now, I know that this is really a very difficult thing to grasp because I'm not saying that you shouldn't make your stop losses larger. That's not what I'm saying. Keep your stop losses at the same. So even if you're trading a larger size, your stop losses are the same. Now, let's give an example. So let's say you're trading and you're making $300 a day. Okay, that's your target. Now, you've made $300 a day for 4 or 5 days. Now you're decreasing your size and your target is still $300, okay? Now, if you're gonna lose, you're gonna only lose $100. Now, opposite, you've got 4 bad days of losing streak, right? So you got loss, loss, loss. How many losses? What's the amount you're losing per day? $100. Doesn't get bigger. You continuously lose only $100. But guess what you're doing? You're getting larger in size. So your stop loss is still the same, but you're incrementally at a certain point going to be making money. At that point, you want to be making back that money. And when you're making back that money, you're making it back on the upside with a larger size. And that's how you make back some of your losing streak, okay? So this was the old way. You've seen the old way, and now you've seen the new way. And hear me out, okay? These are things to remember when you're trading, okay? A lot of people kind of forget this when they're trading, and it's something to really just ingrain in yourself on a continual basis. Number one, you're as good as your last trade, meaning you need to know that you're as good as your last trade. So if you weren't good in your last trade, just rest assured that your next trade is not going to be as good, okay? So keep that in mind, and you may shift yourself at that point to kind of say to yourself, okay, I'm incrementally not doing as well, so I am incrementally going to change my trading pattern, okay? And this is really important because, at a certain point, we are creatures of habit. And when we're in a streak, we think we got the groove. We are in the zone. Okay? You want to stay in the zone. And the way to stay in the zone is to apportion yourself size. Now, again, I emphasize this for the fourth time. Stop losses stay the same in this type of environment. Number two, you're just like the chart. As you're going higher and higher and higher and higher and higher and higher and higher, the chances of you going higher are decreasing, just like a stock or just like a particular trade that is going, a symbol that's going higher and higher. At a certain point, it's going to retrace. Now, at that point of retracement, I don't want you to nosedive. I don't want you to give up your whole winnings and be back to square one. You don't want to be there. You want to be incrementally adding to your position, but you want to also be in a position where you're also protecting yourself. And you can only do that in getting yourself into a smaller size as you're incrementally making more money consecutively. I'm talking about streaks. I'm not talking about P&Ls. I'm not talking about one day you're up, one day you're down. I'm talking about streaks. And this is really very important. This is really part of the trading strategy that one can apply to themselves. It's all about you. It's not about the markets. The markets will do what the markets will do. That's a very deep statement, and you got to remember that, because the markets won't change. They're either going up, down, or sideways. That's just the way it is. Number three, and this is also very important, breaking the streak is essential. Now, if you have 4 bad days, and even on the fifth day, you get a positive day, that's very important. That stops the pattern. That's very important. If you have 4 good days, and then on one day you have a bad day, that stops the pattern. Now you got to shift yourself. You got to then say, hey, I see something's moving in my pattern here. I am just like a stock. Why did I not make money? What did I do wrong? What can I do better on the next trade? Now, if I want to break that pattern, I'm not going to make up that money that I've lost on the last 2 trades. I'm going to incrementally, slowly make it back. Or if I'm losing money, okay, and I'm continuously losing money, I'm not going to try and make my windfall on one trade. I'm going to incrementally make it. I'm just looking to be positive on that 4th day. If I made 3 losses, 3 days of losses, right? So I could change the pattern. That's all I'm trying to do. And when we change the pattern, you'll see that you will be shifting yourself in a completely different zone. Now, there is 2 ways that you could shift yourself mentally. You could do it inside your head, or you could do it on the screen, and then that gives you feedback about what to do moving forward. I hope this helps you and kind of reframes kind of what the old adage of looking and trading was. And the other thing I'll note, most new traders, when they come into the financial markets, they're generally trading the same size going in and out. Meaning, in a distribution of 10 trades, it's the same volume, it's the same size. And what ends up happening, even if they're right on 60% of their trades, if they're not keeping money management on those 4 losing trades, they've given up their entire portfolio. They've given up the entire streak on the upside. So it's really important to learn how to size and how to incrementally kind of play with the size of the trades so that you're making more money on those winners and you're making less losses on those losers by protecting yourself just by trading size. I'm not even talking about, stop losses. I'm not talking about tearing in, tearing out. I'm just talking about the size. This is Fed Razak. We'll see you here next week on Technical Tuesdays. Thank you, everybody.